Hi, I'm Cindy Bennett with Maison Real Estate Boutique, and I am here kicking off the fall-winter market with Josh Crowley from Liberty Mortgage. Thanks for being here, Josh.
Of course, thanks for having me.
So what we're seeing in the market right now are rates that have obviously gone up quite a bit, and people are trying to find creative ways to get into a home that may use mortgage products we haven't seen in a minute. So I wondered if you might share some of those things with us.
For sure. So a 30-year fix was basically the only product that was being sold and consumed by American folks in the past couple years, but that's kind of changing as we go along with the changing market. So a popular product right now is the 2-1 buy down. And what a 2-1 buy down is when a seller gives you concessions to pay down your rate for the first 2 years temporarily. And this is great because your monthly payment and interest rate are going to be lower for the first 2 years. Kind of the drawbacks of that is that when you go into the third year, you're going to be hit with that higher interest rate, that current market rate that we have today.
So if it's like just over 7 right now, in 2 years you'd be paying that
You'd
7.
be back to 7, yeah.
Okay.
And you use seller concessions to do that 2-1 buy down.
So that would be good for somebody who's going to stay in the house for a longer term, or?
Yeah, so the calculation that you have to make is that when you're negotiating with the seller, is that money, that seller concession from the buyer, is that money better spent paying your closing costs, or is that money better spent lowering the purchase price? So that's what you kind of have to weigh the pros and cons of that situation.
Right.
But it could be a great situation if you're planning on staying in the house for 5 to 7 years. And then the general consensus thinking is that you'll be able to refinance in a number of years.
You're getting seller concessions like that because I know sometimes I'm writing contracts now where we're getting full inspection clauses and appraisal clauses and things that we haven't been able to get. What are some of the rules around getting that money from the seller?
Yeah, so there's some restrictions on using those seller concessions, and depending on the loan product and your down payment, you're limited to 3 to 9% of seller concessions based on the purchase price. And you can use those seller concessions to pay for your closing costs. You can use those seller concessions to do that 2-1 buy down we talked about. You can use those seller concessions to do a regular buy down where you permanently buy down the rate and you permanently lower your interest rate and monthly payment. None of those seller concessions can go towards your down payment though.
So what are some other ways, out of the box creative ways, especially for first time buyers, that they might be able to get into a home now when rates are just a little bit of a tight squeeze?
Yeah, number one, you want to talk to your lender to make sure you're still qualifying for that loan and home and purchase price that you're going after. And number two is finding an agent like yourself that you really trust to put in a competitive offer for that house. Don't waste time. Don't lose out on the house of your dreams by testing the market and seeing how soft the market is right now. Because although the market is changing, inventory is still low. There's still more buyers out there than there are houses. So don't get lost in the shuffle by testing out the market and putting in a lowball offer, because you still won't get your phone call returned, especially at that first-time home buyer entrance price.
That's true.
There are a lot of offers on those homes, so put in a serious offer to get the house that you want. That's how you're going to do that. And on the lending side, you definitely want to have a property and offer specific pre-approval dated the day that you're putting that offer in. That lets the listing agent know that you've been talking to your lender actively, you currently qualify at current interest rates, and it just makes your offer look way more serious and you're prepared to close. If you have a 6-month-old pre-approval from a major bank, that lets them know that you haven't chatted with them in 6 months and they don't know if you qualify anymore. So that could lead to your offer be putting on the bottom of the stack. And also having a local lender, I always put my cell phone number on my pre-approvals, and that's usually what I'm doing Sunday night.
Awesome. Well, thank you so much, Josh, for sharing that. And hopefully that helps everybody get a little better picture of what's happening in the market right now. If you have any other questions, give me a call or reach out to Josh for any lending questions. We'd love to help.